Thank you so much for your time and your patience. Let me start by asking you for your assessment of how things are faring in the global economy, where America is in the recovery process, and what impact that's going to have on nations across the world.
Well, it looks like it's becoming pretty clear that we've got three basic areas geographically. Asia, which is doing particularly well in almost every country. North America, with Canada and the U.S., on a pretty good path for economic growth, but slower in terms of a recovery in the States than you might historically expect, with GDP growth 4% in that area, plus or minus, for the fourth quarter, probably somewhere between 2.5 and 3.5 for next year. And the slowest part of the world is Europe. And there are all kinds of estimates, but somewhere in the 1 to 1.5% growth area.
What ranks highest on your list of concerns? Is it issues of sovereign debt that have been sort of, raging across the world? Is it maybe the case of financial overregulation or more intense regulation, so to speak? Is it joblessness? I mean, how do you sort of apportion, the time and the effort you spend on mitigating each one of these risks and deciding where to invest your money?
Well, sovereign risk isn't a large risk at this point. There are only a few countries that are really challenged. We're more concerned about, in the developed world, the strength of the middle class and their ability to consume. And the reason is that their debt, particularly in the United States, is quite high by historic standards. And if they're busy saving to pay down their debt, they can't be buying things at the same rate. So that basically creates a difficulty for long-term growth in the States over the next few years.
What's your view on the exit strategies that different governments are going to potentially follow this year, and what that means for liquidity in the markets across the world, and therefore how it impacts private equity investing?
Well, in terms of the impact on private equity, it's somewhat immune to that type of liquidity concern. Bank lending is coming back around the world. That's pretty predictable. It's cyclical, and as you come out of a recession, usually what happens is that loans which are difficult or almost impossible to get at the bottom of a recession slowly become more available, and we're seeing that in the States. We're seeing it in Asia, and we're even seeing some bank demand from Europe, particularly because our type of borrowings, which are leveraged loans, have more yield. And
right.
When central banks are keeping rates extremely low around the world, since most of the leveraged loans, at least in the developed world, don't create losses, even though they go up and down on a market value. There are very little defaults on a leveraged loan basis for senior debt, where people lose their money. So I think in terms of how the central banks reverse the kind of stimulus they put on, every country's got a different plan, and those plans will kick in when economic growth gets to a point where the central bankers are secure enough in that growth that they're prepared to reverse.
Do you expect that to happen in the second half, at least, of this year?
Well, that's a tough call.
Okay.
In the U.S., which I'm the most familiar with, Mr. Bernanke, as a student, he was actually a professor where he taught about the Depression
Yes.
in the 1930s. And he said pretty consistently that he doesn't want to reverse until he's really secure that the economic growth has returned on a sustainable basis. So I think he's going to be cautious in terms of making changes. The markets are anticipating that change and bringing up interest rates on the long end. They may well be disappointed, and then rates could come down again, and then they'll probably go up again. So at some point, he'll know that answer. I don't.
All right, let me ask you about India. I just heard you in an interview with Maria say that India is one of your more favorite spots to invest in.
Yes.
How does it rank in the various emerging markets that you're present in? And I mean, I know we're not through the business cycle as yet in India. I know it's still early years for you in India. But what kind of return do you expect to get from India over the course of the next 3 to 5 years?
Well, we expect a return in the 20 to 30% area. We really love India. It's been a great market for us. We have a wonderful team of people there, led by my partner Akhil Gupta, We own 8 companies. We're negotiating on several more. I'd anticipate that we'll have 10 companies we own in India. And India is one of the most favorable countries for global growth. It also has additional advantages for us. Everyone speaks English,
Yes.
and that's very useful if that's your primary language.
Yeah.
Secondly, there's rule of law in India. And as we know, it's a little complicated in India with the rule of law, but it definitely works. And so from our perspective, there's the preconditions for a very sympathetic kind of investing that we do there. And the people are very smart, they're educated, they're hardworking, and they want to win. And you have a government that is very supportive of growth. And the government actually, the senior people in the Indian government, travel all over the world, and they make a terrific impression on people. And so they make it very hospitable to want to go there. So altogether, there's not a lot negative from an outsider's perspective about India. Sometimes you get a little bit of bureaucracy, which the Indians know about,
yes.
And no place is perfect. But I'd say on balance, given the alternatives in the world for investing, India ranks quite high.
In the context of growth, in the context of exit strategies, interest rates going up, over the next 3 to 5 years, which are some of the countries that you will be investing a lot more of your money in as compared to others?
Well, China is an interesting country. It's got great growth. It's harder to put money to work in China for a variety of reasons. Different kind of historic culture, but a government that is committed to 8 to 10% growth with massive resources at the governmental level to create that kind of growth. You'll also have the U.S. And Canada as a very good place to invest money. It's the most friendly markets for doing transactions. It's got a great legal system, the biggest capital markets in the world with the most depth, and a whole community of people who like to do investments and companies who like to sell. So that's quite hospitable as well. Europe, every once in a while, becomes extremely attractive, and right now that isn't really the risk-reward ratio in Europe isn't really in line. The growth is slow and the prices are high.
So it would be primarily China, U.S., and then Canada and some emerging markets that you would.
Well,
be
there are
deploying
many
some
other
of your money.
countries that in the world, that can be hospitable. We're starting to look at some things in Brazil right now, which also has good growth prospects. So there are no shortage of places, frankly, for us to look at.